Comparative analysis of FMCG companies' Q2FY25 results. The recent Q2FY25 results of FMCG majors like ITC, Godrej Consumer Products Limited, GCPL, and Colgate-Palmolive reveal sector-wide themes, including margin pressures, moderate volume growth, and strategic adjustments to handle inflation. Here's a comparative analysis of the key themes and performance metrics. 1. Volume growth and demand dynamics. ITC, cigarette volume grew by 3%, but margins saw a contraction due to the rising cost of leaf tobacco. The overall non-cigarette FMCG segment grew by 5%, mainly driven by food products, staples, snacks, and home care. Godrej Consumer Public Limited, GCPL, saw a 7% volume growth in its domestic segment, with robust performance in home care, 11% growth. Hair color products and the Raymond portfolio also showed strength, though personal wash products saw flat volume. Colgate-Palmolive reported 10% sales growth, largely driven by high single-digit growth in toothpaste volume, particularly from its Max Fresh and Strong Teeth brands. Demand for premium products like toothbrushes also showed resilience. Conclusion: while there is growth across FMCG companies, volume gains were modest and largely aided by premium offerings or new product categories. However, the broader trend shows muted consumer demand, putting pressure on achieving sustained high growth rates. 2. Margin contraction due to input inflation. ITC suffered a margin contraction in its cigarette business by 155 POY, mainly due to the steep rise in leaf tobacco prices. Non-cigarette FMCG segment margins also declined slightly by 35 POY due to inflationary pressure. GCPL margins were pressured by rising palm oil prices, leading to a 160 bps contraction in EBITDA margins to 24.3%. While management attempted to absorb part of the inflationary impact, profitability challenges persist in the short term. Colgate-Palmolive reported a significant 200 BP YOY contraction in EBITDA margin to 30.7%, primarily due to increased trade promotion and higher A&P spends. Raw material inflation had a subdued impact, but other operational expenses surged. Conclusion: margin contraction is a prominent theme across these companies due to inflation in input costs such as leaf tobacco, palm oil, and operational expenses. While ITC partially offset this through product mix improvements and strategic cost management, both GCPL and Colgate struggled with preserving profitability amid rising expenses. 3. Segmental growth and strategic initiatives. ITC, besides cigarettes, its hotel segment grew 12% in revenue, with a modest improvement in margin. The agri-business benefited from leaf tobacco inflation, witnessing 47% sales growth. The company is maintaining a cautious approach, with growth likely to be gradual. GCPL international performance was mixed, with growth in Indonesia but a challenging environment in Africa. Despite a decline in Africa's revenue, profitability improved as the company focused on EBITDA growth, reflecting a strategic pivot towards profit maximization over revenue expansion. Colgate-Palmolive focused on premiumization within its core toothpaste category, while also investing in technology-backed tools to enhance operations. The company is diversifying into adjacent personal and home care segments, though growth in these new areas remains essential to sustain its top-line momentum. Conclusion: each company is adopting unique strategies to bolster their growth. ITC is leveraging agri and hotel segment growth. GCPL is optimizing profitability in international markets, while Colgate-Palmolive is expanding into higher-margin, premium products. However, dependency on established segments like cigarettes for ITC and personal care for Colgate could be a potential constraint if inflation persists. 4. Valuation implications. ITC. Despite slow earnings growth across segments, ITC's valuation remains stable, with a fair value of around $500, supported by a diversified revenue base and structural adjustments. GCPL. While it faces near-term challenges due to palm oil inflation, a focus on profitability in international markets could support a higher valuation as inflationary pressures ease. Fair value is $1450-1475. Colgate-Palmolive. Given a high valuation base, margin pressures are expected to weigh heavily on future earnings. Limited volume growth and sluggish demand outlook are likely to constrain upward valuation revisions. Conclusion: valuations for these FMCG companies are likely to stay range-bound due to inflation-led margin pressures. Investors may see limited upside until significant easing of cost pressures or a demand revival occurs. Overall industry outlook. The Q2 FY25 results underscore a mixed performance for FMCG companies, facing external inflationary pressures that hinder margin expansion. While ITC and GCPL have diversified revenue streams to mitigate risks, Colgate-Palmolive's reliance on the toothpaste segment may limit its growth potential. Across the sector, a cautious approach with a focus on selective price hikes and cost efficiency is expected to remain critical for navigating the current economic environment. That's all for today. Subscribe and tune in for more such analysis on the equity market and corporate news. Brought to you by DreamLadder Capital, guiding your financial future.